Hello, everybody. This is Live Trading Talk Market Wrap with Patrick MontesDeOca. This is the Equity Management Academy Live Trading Room. And we're going to go right into the market here, what basically happened today as we came in this morning for gold, silver, and Bitcoin. The market opened into a sharply lower opening here after coming back up to testing that 1803, activating actually a bearish price momentum from a close below 1825. And when we came down to this level here, we anticipated this correction here into the target zones, ideally at the extreme below the mean. And in fact, the market has entered into the weekly high probability area, the high probability level that indicates the possibility that from this level here, even though the market may come down, it could revert from here. And there were no trades basically for the gold market today, as this trigger point was at about 2:15 a.m. So where are we now in terms of gold? Basically, it is in an area that is called extremely oversold conditions. We'll take a look at the daily numbers here tonight, but trading in this area can activate and attract buyers. This is the area where the VCPMI tells you to accumulate supply. And depending upon your profile and your size, you can use this to position yourself. If you're a multi-trader, multi-position trader, whether it be a full-size contract or a mini contract, this is where you can begin to accumulate your positions. Your stop level could be a close below 1775 if you choose to activate that risk. The mathematical probabilities are that the market, the lower it goes into the weekly numbers, the higher the probability that the market could revert. And so what I'm doing here is I'm buying and I am accumulating from these levels, anticipating that we're going to get a close above again 1803. If not, if it comes down to 1775, I'm going to add to my position and expect a reversion back up to 1817 again, and possibly a close above 1817 will bring back the 1845 target that we have for the rest of the week. We haven't completed this this mean reversion pattern at the extreme above the mean, even on the daily. So we'll take a look at where we are for the daily tonight, and we'll compare it to the weekly signals for tonight's session here, that pretty much we update for our subscribers the data in about a half hour or so. That will give you the prospective data for the following trading session, that you can apply it for night session or for day trading session. The silver market, is basically into the same zone. It is extremely oversold. it has come down to the extreme level below the mean of 22.27. It has come down below the daily mean today of 22.41. But we got a monthly signal. On a monthly buy trigger of 2201. This is a long-term signal, a monthly signal. This is where you can use the signal to dollar average your position or to initiate a position, but it is a pretty strong signal. So we activated a buy trigger on the monthly signal, and we're holding this swing to long-term position. The short-term we're looking at the weekly trigger point to be a close about 22.27. Now, as we came in today here, we had a stop loss on our buy position that we took yesterday, and we risked $1,000 on the trade. We got stopped out. But we came in and activated another buy trigger using the monthly pivot points of 22.02. So we're long silver, we're holding silver, and you can use, again, a dollar stop that is according to your profile, according to your comfort level in terms of managing the risk. The thing I want to say to you is, if you are just beginning to join me or beginning to listen to the AI that I'm interpreting here of this algorithm, is that the signal activating from the buy 2 level on a close about 22.27 is going to be a very high probability signal, with about 95% probability that upon activation, the market is going to revert back, as it did here, but found sellers at the target of 22.41, and it reverted back again, but it did meet the target. So if it activates a buy trigger, 22.27 is your first target from the monthly 22.02. Then you can use the dailies, 22.41, 22.61, all the way up to 22.81, which is the weekly buy 1 level. And obviously, if we engage the weekly trigger above 22.81, then we're looking at about 23.15 for the rest of the week. 23.15 is the area where harmonically aligns with the daily signals. So we've activated today a buy trigger from the monthly level of 22.02. And you can use that level, if you are a conservative trader, as a protective stop. The silver market, let's take a look at the Bitcoin market here instead for a minute. And pretty much it appears that metals and Bitcoin are following the same pattern formation. And coming down into this blue level again of support between 43,883 pretty much uses the same artificial intelligence that it tells you when you get down to these levels here, you're going to be into a high probability level of accumulation that potentially what you want to be looking at is a reversion to unfold to the upside. So you want to be cautious selling into this as opposed to preparing to accumulate supply. The market did not come down to the buy 2 level, even the buy 1 level daily of 42,170, and it reverted right back up from the uptrend line support that you see here on this red thick line. So we're looking at the market on a weekly basis into an area that is called oversold conditions, and we're looking for trigger points. And the trigger points identified by the VCPMI pivot points are obviously the buy 1 again of 42,170 or 41,492, unless it closes above 43,883, which will activate the weekly, and it would basically support the momentum towards the daily VCPMI. We'll know what tonight's number is going to be here in a little while. What I want to share with you is a bit of the live show that we did earlier here, and take a listen to how we execute the signal in real time.
Price can. You want to look at the level sign beginning to buyer. Case. So I'm comfortable because the price has. This is a high probability area to accumulate supply. And so that depends upon you as a trader in terms of what instruments, how you build a position, how do you accumulate supply? How do you accumulate your inventory? And you have stocks, you have futures, you have options, you have a combination, ETFs, single, double, triple X ETFs. And that depends upon your profile. But coming back to the algorithm, the variable changing price momentum indicator is telling us that the market is in the highest probability area in these pivot points to accumulate at these levels. And we also see the cyclical patterns pretty much also confirming in a couple of hours, potentially the bottom is going to be made into this level. So what we want to see is actually the market confirming that. And the confirmation would be a close above 1794 for the gold market. Second alternative would be activating the buy 2 level of 1775. So for the time being, if you are an aggressive trader, you can start to accumulate into this area, and you can put your stop on a close below 1775 and see what the market does if you are willing to carry that much risk. So let the market trade here and see what it does. And we'll continue to update and watch this throughout the day. We have a lot of volatility in silver, basically making a low of 22. It seems to be coming down and testing this low here once again. It is extremely below the weekly and daily mean. So the market is extremely oversold, daily and weekly. Let's watch the market here for a little bit on silver as well. And if you're an aggressive trader, this area is a high probability of a reversion to unfold from here. 2277 close above is confirmation on the weekly. The monthly, if we take a look at the monthly, 2201 is the monthly buy one level, and we are right at that level. 2202, so we're pretty much activating a monthly signal here, alerting. This is an alert that if we close above this bar, this pivot point 2202, a monthly trigger point will be activated. So it looks like the fundamental news that are coming out with regards to tapering interest rates, Omicron, is making a bottom, potentially a bottom in the gold and silver market. And we're looking to capture this bottom here, separating ourselves away from the fundamentals, which I believe have been pretty much discounted in the market. When you take a look at this correction here, from the monthly average of 2275 by coming down below, it activated this price momentum, bearish price momentum that met the target here. Now, this may be a really good time here to talk about the difference between the price momentum and the trend momentum. And I had a question by one of my readers here regarding that, so I think this is a really great time to talk about mean reversion trading. He asks basically, then what do you mean by mean reversion as it applies to real trading? How does it apply in this particular case to gold? Is there some mean price of gold? If so, what? Question mark. If the price is not at that mean price, when will it revert? Okay. The first clarification is that the last price is not the mean price. The mean price is the average price. And the price, basically, when we talk about the difference between price momentum and trend momentum, the price momentum is the velocity of the price within the pattern, within this pattern that we're looking at. The price momentum is the momentum, the velocity within this bearish trend. if we take a look at the major trend. And in this case, we're looking at the monthly signals. And obviously, if you take a look at silver on the bigger picture, the big trend, you're looking at a bearish pattern that we've been in since 2542. This is the bigger trend. This is the bigger trend. This is the trend momentum. What we look at is at the price momentum using the 15-minute bar to activate live signals that are triggered using the artificial intelligence provided by the VCPMI. So you want to understand when we talk about the price momentum, which is the average variable changing price momentum, is really the velocity of price within that trend, within the bigger trend. In this case, the bigger trend is bearish, and the price momentum is also bearish when it trades below the average. When it trades above the average, it's bullish, as you can see here, within a bigger bearish trend. The thing that it identifies is the momentum, the price momentum aligning itself either against the big trend or going with the trend. And in this case, obviously coming down below the average monthly was going with the trend. And bottoms are made on a counter trend basis because they usually turn the market within the big trend, but on a smaller scale, basically using shorter time frames, shorter cycles, starting from a minute to 5 minutes to 10 minutes to 15, 20, and so on, daily, weekly, monthly, and then you go into the annual patterns. If you look at the market from a technical point of view, this is how you dissect the relationship of price, short-term and long-term, by identifying the bigger trend and using the shorter data basically to identify the price momentum within that big trend. And that is the big difference between price momentum and trend momentum.
And that is pretty much the way that we trade the VCPMI during the live sessions, live trading, and applying basically the artificial intelligence provided by the variable changing price momentum indicator. We'll take a look at the numbers here in about a half hour. So we provide that to our private subscribers here in a private trading room. And if you would like to join us, let me know. Send me a note, subscribe, like, and I'll see you in the trading room. You take care, my friends. Be well. I'll talk to you soon.